Welcome, everybody, to March 1st. Wow, it's wild. We're already at the last month of the first quarter. I feel like it just turned 2024, and we're already almost through Q1, which is crazy. Q1 is going to be a little bit of a ride, I think, when we get Q1 earnings, because a lot of people are going to be holding their breath. And those will come out in April and May, of course. And we're still going through the other set of earnings from Q4. But this will be really interesting because we'll see, hey, the Fed's telling us GDP is 3% right now. At least the Atlanta Fed's latest estimate is 3%. And so the question is this being supported by government money printing? Or are we actually seeing these earnings? So far, based on what we've had in Q4 earnings, it's been earnings. We were talking about this maybe 2 or 3 days ago, that somewhat on 90% of S&P 500 companies have reported. Over 70% have beaten, which is a higher ratio than we historically see. So earnings seem to be, or stocks seem to be supported by growing earnings. And yesterday, which we'll be posting it today, we filmed a video in person with Ross, sort of a podcast, and he has this very interesting argument over you don't need to have a landing at all. What's this idea of having to have a soft landing or a hard landing versus no? Just keep flying the frickin' plane. And I thought that was very interesting. Now that's something that has been sort of touched on in times past, where folks say, "Oh no landing economy," but I think that option is becoming a little bit more highlighted by folks as a real possibility. We'll see, but anyway. Let's see here. Yeah, I see a lot of people chatting here about Dell. So what ended up happening at Dell? And Dell's up 26%. Holy crap. Yeah, look at that. So you get the shout out from NVIDIA, and boom, explosive. Now you are an AI company. Let's go. Dell gains 21% on fourth quarter increase in AI server sales. Holy smokes. Dell projects PC sales unit growing in low single digits. Return to growth in traditional storage-based server sales, but they are looking at Q4 EPS of $2.20 versus the estimate of $1.72. That's a big fat beat there. And total Q4 net revenue of 22.3 versus 22.1. Not actually that much of a beat here. The forecast for Q1 was about 21.5 billion. So I don't see where I think the huge beat is actually on the annual. Yeah, there you go. The annual might be as high as $93.5 billion for the annual. That's probably where you're getting your beat. So let's go to 93.5 divided by 4. Yeah, that puts you at about 23.3 billion per quarter. And we just had sales in Q4 expected to be around 22, beat slightly. So 23.3, that's going to give you a boost here. And then, of course, whatever they mention in the earnings call is going to make them pretty excited. They got name dropped by NVIDIA, and after getting name dropped in NVIDIA, we did in the course member live, we looked at their earnings call, their last earnings call. We're like, wow, this actually looks really good. Like, here's a company with like a 1.6 peg that people aren't paying attention to as an AI play, and here you go. Sure enough, look at that, 26% on earnings. That's a big move for Dell. That I think is going to break. Yeah, that breaks its all-time ever highs. You had a 101, you had a 108, and now you're sitting at 119. That's really impressive. So good job, Dell. 26%. Good job. So we have, let me see here. All right, let's get to some of the Suit Live things here. So stealth rally in riskier stocks is a good omen. Riskier stocks that often lead the market when coming out of a downturn are having a moment, outpacing gains in broader U.S. equities. And that's some sign of growing optimism. Okay, we're talking about the Russell here. Let's see here. IWM Zoom out for a sec. We've got IWM. IWM's been rotating up since about October here. These are small caps. Russell closed up 5.5% for February, surpassing the S&P and NASDAQ. And in the process, it briefly broke above an important resistance Thursday, right behind highs it last touched December. At the same time, Bank of America data on equity flow shows momentum in small cap exchange traded funds has continued. Inflows of 23 of the last 24 months, weeks. Okay, so I see what they're saying here. So there's this idea that, hey, if we're going to, see riskier, smaller caps outperform, then maybe that's a sign that markets are comfortable with inheriting some more risk. And historically, I want to see small cap Russell 2000 index again trying to break out of its sideways range. Yeah, okay. So really what we're doing here, let's see, I like to get their thesis. Take a horizontal line. You're trying to do this, and the suggestion is if we can get some form of, there we go. If we can get a breakout here on the Russell, that it's a sign basically of the market being willing to take more risk via the Russell, and at the same time as seeing this in the Russell, you're seeing the level of inflows into small cap ETFs, which I don't know how related those two are because, the inflow could also be driving the Russell up. But 23 out of the last 24 weeks, it implies more of a risk appetite. That's essentially what you're getting. Okay. So I'll write that down. So how are we going to write that down? So let's see. Inflows into small cap ETFs up 23 out of the last 24 weeks. Possible sign of riskier stocks starting to outperform, something commonly seen during an economic bottom. Okay, very interesting. Moves in small cap companies are followed keenly by investors as a bellwether for the economic landscape. High sensitivity to broader downturns, interest rates. This group does well when interest rates are lower or when the market expects rates to fall. Oh, how fascinating. This makes the recent run at small caps more exciting as it's happening at a time where investors have pared back their expectations for how much the Federal Reserve will end up lowering rates this year. Some are advising against reading too much into the exuberance of small caps. That's a fascinating idea. So more risk and more interest in potentially the smalls, especially just 23 weeks, that's almost half a year that you've seen that already. Fascinating. Okay, let's see, what do they have here from Barkin? Inflation is coming down, we should be cheering that. Yeah. Am I saying anything interesting? I feel like that was yesterday. I don't know if that's anything new, but let's listen in here.
Do you feel like you guys have won this battle in terms of getting the market back in line with where you guys are?
Oh, Lord knows I'm not spending any time trying to have swagger against the market. I'm sure the market always wins. Look, all we're trying to do every quarter is to put down our best forecast.
Right.
And based on that forecast, to try to figure out how you would run policy. Right. The future always starts with the forecast, not with the policy. And so what do you see happening to demand? What do you see happening to employment? What do you see happening to inflation? And based on that, what do you think you need to do?
He wasn't swaggering.
Policy?
I saw when I looked, he walked in.
Wasn't swaggering?
He was not.
Yeah. So we'll have to do another one in March, but we'll see. The forecast has come in more consistent with our forecast, and therefore the markets have adjusted. And I think if the data comes in different, then we'd adjust.
So do you still believe there will be rate cuts this year?
Yeah, that's.
We'll see. I'm still hopeful inflation is going to come down, and inflation normalizes, then it makes the case for why you'd want to start normalizing rates. But to me, it starts with inflation. It starts with demand. It doesn't start with rates.
It's possible they're normal right now, a lot more normal than they were for the past 10 years.
Well, that's our star question. It is the question of you've raised rates to 5 1/4, 5 1/3. Why hasn't there more impact on GDP? That's a.
But the change is shocking after being at zero,
Right.
but the absolute level is not shocking with what we've seen for the average over the last 30 years. That's what I can't get my.
Or 300 years. I mean, it's the years of under 3% interest rates really are highly focused in the last 20 years.
So how do we know this isn't where we should be and you shouldn't cut it all and maybe we even end up at 6 permanently?
Well, you're always asking yourself the question of, are you restrictive and how restrictive are you?
Are we? We have never answered that.
The folks I talk to who are in manufacturing and real estate, commercial and residential, home improvement, they all think
they
we're
say restrictive.
So we're certainly,
And then
we're certainly having
the Magnificent Seven say no.
Yeah, we're certainly having some impact there. You know, one piece of data that I like looking at is interest costs as a percent of revenues, both in the corporate sector and personal disposable income in the personal sector. It's come back up, but only to 2019 levels because so many people refinanced their mortgage, so many people paid down their credit card debt, so many companies refinanced their debt. And so in aggregate, the impact of interest on the economy is still, I think, somewhat on the come.
Tom, we have to go. There's another superstar guest waiting in the wings, but very quickly, is there a chance that there could be rate hikes this year and/or no cuts this year?
Well, the economy is going to tell us what to do. I mean, your rate hike scenario is a accelerating economy kind of scenario. Inflation's starting to spiral. As I said, that's not what I'm hearing as I'm talking to my contacts. You always have to be aware of the possibility.
Did you say earlier you were going to come back in March? We said we have to do it again in March. Did you mean come back here and sit around the table?
Happy to come back
All
whenever.
right on.
If y'all will have me here, I'm happy to come
Yes.
back.
Here we go.
Thank you. That was great.
Thanks,
Really appreciate it.
Pleasure.
Okay, when we come back, the impact of immigration on New York.
I think that's interesting. So they're barking up. I like the response to rate hikes. Well, that would be inflation starting to spiral and an economy growing. Not what we're seeing. Very interesting. It's a way of saying no. Basically, no. We're not planning on hiking rates. I mean, he could have easily said something to the extent of, yeah, rate hikes are definitely on the table. That's what I was expecting him to say. We didn't get that. But I thought at least he would sort of leave the door open to that. But he didn't even want to do that. That would be inflation starting to spiral. Very interesting. Okay, good. So good little pep talk. What does that put us at now? That puts us at 75.5% chance of no cuts in May and 34.2% chance of no cuts in June, which means about a quarter of a chance we get some cuts in May, more likely a 65.8% chance that we get cuts in June. Junie. All right, and then we've got Elon Musk. Oh, good old Elon. Elon Musk files lawsuit against Sam Altman and OpenAI. Oh dear. Saying they violated the AI startup's founding mission by putting profit ahead of benefiting humanity. That's going to be very interesting. One of the things that people will argue is that by putting profit forward, you potentially benefit humanity faster and more rapidly by sort of igniting this artificial intelligence revolution. And think about the profits that have been generated in, AI-related and AI-adjacent companies. They've been game changers for not just employment, jobs, for investment, CapEx, keeping the economy out of recession. So that'll be really interesting. I wonder what arguments they're making. Let's see here. Elon Musk, who co-founded OpenAI but no longer owns a stake, filed a suit late Thursday in San Francisco. I wonder if I can get a copy of that sucker. Oh, I think I can. Yes, I can. Ooh. There's the complaint. $435 fee to file. Okay, let's see the allegations. Okay, the general allegations start with the risks of artificial general intelligence. Over the course of the 20th century. Oh my gosh, okay. We're going into a history lesson here. All right, founding of OpenAI. Yeah, this is going to take too long to read here live, but this is actually very interesting. The founding agreement is breached in 2023, having reached the threshold. Oh, they're arguing that GPT has reached the threshold of artificial general intelligence, which under the founding agreement, they were developed to benefit humanity rather than any for-profit company or personal profit. Defendants radically departed from their founding agreement. And GPT-4 is an entirely closed model. The internal design of GPT remains a secret, and no code has been released. How fascinating. Okay, so at just an overall glance, without having sat here and read the whole thing just yet, they're simply arguing so far that, hey, you said as soon as you go artificial general intelligence, your profit motives would stop, and the goal would simply be to open source the AI knowledge, hence the name OpenAI, and you're not doing that. So now you have multiple arguments. You have the argument of, have you reached artificial general intelligence, A, and B, did you violate the agreement that you have had? That'll be very interesting. Very interesting. So I guess we'll find out. Let's see what they're saying here. Oh, I want to see what this person's saying really quickly. Let's listen. You got your New York mayor here for a sec.
Denver, Houston, Washington, D.C., and other local municipalities, El Paso, Texas. No city should have to carry the load of the migrant and asylum seeker crisis. It's a national problem. The long term is having a real immigration reform that's taking place, but immediately we need to have the proper funding because it is impacting all of our cities at this time economically.
There's a historical issue here, though, to talk about, which is the sanctuary city status that New York has or has had, something that you are now trying to change. Can you speak to that?
Well, we believe in the sanctuary city status. Immigrants that are here should be allowed to continue to move forward in their lives. We're talking about a specific part of it that was changed under the previous administration. From the days of Mayor Koch and Mayor Bloomberg, there was a clear indicator for those who commit serious crimes in the city. They should be able to be deported after they serve their time. And I continue to believe that as a former police officer. We have a job to apprehend those who commit crimes. The prosecutors prosecute, and I think the federal government should use this authority after the time is served to deport the individual. Dangerous people, no matter if they're migrants and asylums seekers or long-term New Yorkers, should not be carrying out violent acts on New Yorkers. And the overwhelming number of migrants and asylum seekers here are trying to take that next step, but there is a small number that are violent and they're dangerous.
You spoke earlier about the idea of having these migrants work in New York and giving them an opportunity to work. Have you ever thought of just doing it on your own at this point?
We would love to. Trust me, I've turned over every legal stone to see how we could go about doing it. But if we do it, we could expose ourselves to violating federal laws as well as the city being sanctioned. And would you believe I cannot even allow migrants to volunteer and give them a stipend? If I wanted them just to clean up and the areas where they are staying, that's not allowed to do. When you think about this, this strikes at the heart of who we are as a country. All of our immigrants that have come to this city, all of us in this country, we had the authorization to work and earn our rights to be here. And that's all the migrants and asylum seekers are asking for.
But one of the things we're doing is an experimental program to provide debit cards with cash on the card. This has created enormous controversy in the city among some taxpayers who say, why are we paying and giving out this money to these migrants?
Yeah, people are pretty pissed right now about immigration.
Migrants to come to New York.
And the reason it's creating such controversy is because how it has been reported and distorted. Here's what we're doing. We are required to feed migrants and asylum seekers as well as everyone else in our homeless system. About 40,000 are in the homeless system that are not migrant and asylum seekers. We're required to feed them. And so what I told the team to do is we have to find a way to do it that's less costly because we want a 30% decrease in the cost of the migrant crisis, and that we don't have food waste. We were able to do that. We're saving approximately $600,000 a month, $7.2 million a year by giving individuals a card that allows them to buy food or baby supplies, spending $13 a day on food. That's cheaper, that's less food waste. This is a real win-win for us. And the money will go into the local economy because now we go into the local stores, supermarkets, where we're going to hire local. This is a smart way to bring down the cost and replace the money back into our city.
Mayor, a very direct and political question. When you look at President Biden, you look at former President Trump, and you look at the migrant crisis that you are facing,
well, I think
which one do you believe will ultimately help you solve that crisis faster?
I'm a supporter of the president, and I think when you do an analysis of this issue of immigration, this is an issue that has been played out too long on the political stage of our country. It has to be resolved. It's one of the top issues that voters are looking at. I think that we can solve it now by taking some very clear steps, such as the decompression strategy, funding these cities, allowing migrants and asylum seekers to work. We did almost 25,000 with work authorization and TPS. When it was recently expanded, we can go even further to some of the other cities and municipalities.
Mr. Mayor, I've seen you can imagine.
Is he basically saying just keep funding it?
It was President Biden basically sounded like something from the Statue of Liberty. Bring us your tired messes. This is why we're here. If you want to come here for a better life, come here. We want you to come. Then he rescinded, 90 executive orders at that time. I mean, it's clear where the 7.2 million, I think we can at least ascribe some cause and effect to those comments and getting rid of all the executive orders. Do you think the president could put some of those executive orders with the sign of a pen back on, and would that help? Would you urge him to do that to help your situation?
The most important thing I believe we could do during this crisis is allow people to work. Everyone who passed through the Statue of Liberty came here, and even if it was a menial job, it gave them the dignity and respect that everyone that here deserves. Think about it for a moment. Do you know we don't even hear about the Ukrainian citizens that arrived here? We have a large Ukrainian population after the war that's here in New York City. You don't hear about them. You know why? They have the authorization to work. We gave them the financial support that they deserve.
Okay, we're going to pull off of it. I was interested for a moment just to see the perspective, just because this has become so, oh gosh, how could you say, it's so contentious, so politically contentious. Immigration has certainly been something that's very frustrating. I think a lot of folks are, upset over how challenging the economy is presently and how many people are working their butts off, and they see people who come into the country and are supported more by the government than themselves, and they've been paying taxes for years and decades. And so I think the sort of disproportionate government response has led to a lot of frustration, and so a lot of people have curiosity over what politician is actually going to be able to solve the migrant crisis rather than than just talk. I mean, look, we had a giant immigration bill, and 2 days after the immigration bill, which was supposed to be bipartisan, was released, it's dead. And it seems to be politics, for now at least, is nothing is better than something. Oh well. All right, so anyway, going back to OpenAI is also being subpoenaed by the SEC. They're looking into whether or not the company misled investors. That doesn't necessarily mean that the company did anything wrong. Just receiving a subpoena is kind of like, all right, hey, we're going to check on you now. But, could potentially mean that they're onto a lead or something. Who knows? This coming at the same time as Elon's lawsuit here for OpenAI to benefit humanity will put a little pressure on OpenAI, it seems. So the next thing we saw yesterday was New York Community Bank is pulling a reverse Dell. New York Community Bank, instead of up 20-something% is actually down 20%. This is now the lowest level that you've seen for New York Community Bank. You are sitting at $3.80, and this stock has consistently been above this level. The lowest level we saw during the banking crisis last year was about 540. Recently, we got down to about 420, but we've been in the mid fours in some hopes that the company's been able to rebalance here. But instead, now the company is taking some special charges relating to loans going all the way back to the pre-financial crisis era. So these must be some 20 or 30-year loans that they're taking some adjustments on, or the way they're creating calculations on their loans. They're taking technically it's a goodwill adjustment that they're taking, but that often has to do with acquisitions that they made in previous times, and so they're taking a $2.4 billion adjustment on this, which is a non-cash expense. But the bigger question is why the company is flagging material weakness in their actual underwriting of loans and their accounting standards. That's usually a problem. New York Community Bank is delaying their 10K, which is their annual report. After delaying their annual report, they are basically telling the world, hey, we've got some serious accounting problems. Don't worry, we'll be able to figure it out. We don't know if that's actually true or if this is potentially the start and next wave of the banking crisis. If you look at the Bank Term Funding Program, its usage hasn't really gone up in the last about a month or so. Ever since the arbitrage died, there was a moment there at the end of the year where you were able to borrow from the Bank Term Funding Facility and earn more money on money markets than you were actually paying to the Bank Term Funding Facility. That ARB was killed by the Fed about a month and a half ago. And since that ARB died, the Bank Term Funding Program hasn't actually been really utilized as much anymore. It's actually just been, flat. The program comes due March 12th and will slowly fade out as loans come due over the next year thereafter. They don't all come due right away on March 12th. Then I expect the Fed will probably give some extensions. But one of the most powerful ways to actually help these banks out with problems would be to lower interest rates. This New York Community Bank crisis is an example of, you're starting to get to the fringe of maybe creating some irreversible damage for some of these companies. Now, a lot of free market capitalists will argue that, well, that's what we need. We need these banks to get flushed out and go bankrupt, because otherwise there's zombie companies that don't actually make money, and they need to disappear. They need to fail. It's fascinating. So we shall see. But New York Community Bank news is definitely something interesting. How do they still have the mayor on here? What could they be talking about now?
That's part of the problem, no?
I feel your pain, but I left Albany many years ago. I'm no longer the state senator. I'm the mayor. New Yorkers that don't want this to take place, they have to share their voices in Albany about open use of marijuana. Right now, it is legal to do so.
Mr. Mayor, we always appreciate having you on the broadcast.
Thank you.
We are always rooting for New York, so thank you.
Take care.
You bet.
You got that, Mac? All right.
Okay, there's nothing else left over there. It was just their outro. So, let's see here. New York Community Bank, retro. We saw that $2.4 billion goodwill adjustment. Again, that's non-cash, so I don't think it's so much that. I think it's more what it would relate to. I'm going to try to find that. If I go to New York Community Bank Investor Relations, there should be a statement on this. All right, here we go. So let's see what we have. New York Community Bank. Okay, so they announced the appointment of the new CEO. We saw that as well. This is very common. They kind of try to frantically put people in the right place to try to calm the market down. Okay, what about this write-down? Let's see. Where's the write-down? Okay. 10K. More information regarding these factors will be released in a Form 10K. Yeah, but they don't actually talk about the delay here, do they? 7th largest bank originator of residential mortgages. 5th largest servicer of mortgages. 382 billion in unpaid principal balances. Wow. Yeah, I don't see that in this press release. That's more just the announcement of the new exec. Fine. Then let's go to SEC filings. That's where I'm going to find it. So they're not press releasing. They're oopsie doopsies. Oh, yeah. Okay, here we go. Notification annual report will be submitted late. Current report filing. Amended current report. Okay, here we go. Okay. Okay, here. Reasons. 10K. New York Community Bank has determined it is unable to file without unreasonable effort or expense its annual report by the due date. Okay. Let's see. Okay. Here's a goodwill impairment relating to 2007 and prior transactions. Certain measurement, period adjust impact, a company bargain purchase gain from the company's acquisition of certain types of signature bank assets. Okay. So they're writing down the value of their acquisition, going as far back as some of these loans. Probably signature bank loans. That's what they're trying to say. They're trying to... Okay, all right. I think I understand. Hold on, let me read a tiny little bit more here. Company's working diligently to finalize its 10K. Company expects to file its 10K within 10 days of the grace period. Doesn't expect its statements to differ materially from those reported, but it is taking them longer to file this. Okay. Why would you... I guess I always have trouble understanding why you would do a late 10K. I feel like wouldn't it almost be better to just like stay up all night and finish the darn thing and then file it, and then worst case if you have to amend it. I don't know. I feel like filing and then amending if you need to is better. But then again, who knows? Maybe they're waiting for, who knows, some kind of data they just don't have. That's a possibility. They do file, what is this? The 8KA, and they do post their current financial statements. Net loss in the 12 months ended December 31st. Net loss expected to be 79 mil with, let's see here, interest income 5.4 billion, interest expense 2.4, provision for credit losses 833 million. It's quite a chunk. That's way higher than previously. I think that was about half a billies earlier. That's now up to about 833. And then where are these other expenses? Compensation, benefits, other. Goodwill impairment. There it is, 2.4 billion. Okay, so that shows up as a loss on their annual report. They're taking a bunch of expenses here on merger-related expenses, goodwill impairments, 2.4 billion. Goodwill impairment completed its goodwill impairment on February 23rd. Okay. The company adjusted its balance sheet for that goodwill impairment. No impact on the financial ratios, fine. Identified triggering event for the fair market value estimate of historical transactions. I wish I could know which of those were. Company recorded decrease in 19 million in purchases stemming from the Signature Bank. I wish I knew which assets were getting written down. That's the toughie. We don't really know the answer to that. Okay. All right. So it could have to do with stuff Signature Bank has, just longer term loans. And maybe that's what they're trying to make markets think is, oh, it's not us, it was them. That's possible. But it still makes you wonder how much more of this nonsense exists in the, quite frankly, broader markets to where, in broader banking sector. I don't know. Let me see if I can read anything on the Doomsburgers on this. Let's see here. Another clear setback for the company, a significant concern that suggests credit costs could be higher for an extended period, and the workout of credit issues in both multifamily and office portfolios will likely take an extended period of time. This has to all be related to really their existing loan portfolio. Well, let's listen in here for a moment.
Of the month of February, started seeing why NVIDIA was important. We started realizing that there are companies that are far ahead because they're using AI, and there are companies that are being left behind. There are companies that have made it so that they're getting a lot of new customers and ones that aren't. And I'm going to do something that's a little class-oriented. Okay. The big guys have it, and the little guys don't. So you're going to see, I think, a widening gulf between the rich companies and the small, medium-sized business. And
yeah,
even though there are
agreed.
companies like Adobe that are frantically trying to help the SMB, so to speak,
Yeah.
only the big guys can afford what Jensen's putting out, Jensen Huang.
Yeah.
And right, of course. I mean, it requires enormous computing power to run generative AI models.
And therefore a lot of money.
Or at least given just what you have to actually do. And it's hard to afford an H100 for most. But won't the applications start to filter down eventually to these companies that you're discussing?
That's the idea. For $20 a month, you could pick it up, right?
Servers running or paying for the enormous compute that they need to do it initially.
Well, I think that filter down is absolutely right. But right now, and we'll get to Dell, but you look at Dell versus HPE, which I know you know. Dell got the H100s. Dell got the finest, chips from AMD,
right,
which are also AI oriented, and we're talking about huge amount of storage that's needed. I don't want to get too in the weeds here. What I'm trying to say is that, when you look at, like, I have some companies, and I'm not going to pick on them tonight because they're nice companies, but David, you're aware, you can either cover the 100 to 100 billion to $3 trillion companies, and the numbers are just extraordinary. Or everything else is like 30 or 40 billion, and you find yourself saying, why should I look at a company only at $1 billion in revenues? It's unimportant. Mm-hmm. This is an amazing time because the big companies, you're talking about revenues that are making it so that Mag 7 actually makes sense. There's like, whenever I look at a company now, I think, why am I wasting my time on this thing?
Well, first of all, that goes in against so many of the things you've talked about, which is there are opportunities everywhere, Jim.
Well, that's what
you're not going to stop saying that.
No, but it's saying in the last 10 days of February, when we sit back and look at the quarter, we realize that there are companies like a Celsius where you can double very quickly and on a short squeeze. There are companies that get takeover bids. And then there are companies like Dell that overnight we realized was the one that had the cards. Yep. Therefore, they have the servers. Therefore, they have brought...
That's funny. That's an interesting way to put it, that overnight the market sort of realized, oh, Dell's actually playing this as well. NVIDIA gave this a shout-out here. Remember, I mean, we pointed this out in the NVIDIA video after we went through the earnings call. I'm like, wow, Dell just got a big shout-out here. It's trading for a 1.6 peg at like $80. It seems like nobody's paying attention to Dell being an AI play. And now here you go. Market wakes up. Oh, Dell is an AI play. How interesting. Yeah. So here you go. Now it gets price target upgrades. Literally just moved from. These are some big price target upgrades. Okay, let's take a look at some of these upgrades here. So we're gonna write some of these down. So you've got price target raised from 100 to 128 at Morgan Stanley. You've got 105, from 75 to 105 at Cohen. You've got, it's always afterwards that these price targets get raised. From 53 to 94 at Barclays. So that's at least 3 price target upgrades here. You've got, again, this. It'd be really interesting to look at the Dell investor relations page just to see if we can segment out the AI server sector, because the tape doesn't really give it to us that well. It just indicates that, I mean, we obviously beat, but the beat doesn't seem that dramatic. So I wonder if the forecast is really what's driving this particular movement. Okay, I'll take a second to get that. All right, here we go. Dell Investor Relations. All right, so yeah, let's just grab their press release quickly. Earnings call would be nice too, but let's start with the press release. And when we look at, I mean, the forecast is obviously positive, and it's one of the few I feel like that's been left behind as sort of like that's not an AI play, that's a compute play. Let's see what we have. Where is the AI talk? So this is the statement here. So we actually have a decline in overall revenue of 11%. Net income, let's see here, 1.1 billion. That's obviously substantially higher than the net income we had here. So how did net revenue decline and net income just explode? That's very interesting. Yeah, this is Dell. 22.3 billion in the quarter. Their full year revenue was 88.4. They're expecting that to go up to about 93.5 guide. So what I think is interesting there is that's not even that big of a gain. That's 5.7%. So you've got 5.7% of a move here. Yeah, that's interesting to me. It's not even that big. I mean, like, you look at an NVIDIA and it's like it's a double year over year. Here you're talking about growing 5%. And their fourth quarter revenue was down year over year. Operating income was up 25% though. Cash flow from operations up 1.5. Revenue was down 14%. We saw that. So interesting. So infrastructure solutions were up 10% sequentially. There's your growth. Okay, let's make that one green. This is what's exciting, folks. This 10% sequentially is somewhat implying that maybe that Dell growth is just beginning, right? Is Dell just now at the beginning of AI-supported growth? That's a consideration here. That really where you are is, hey, people are just waking up that we provide this server infrastructure. Why buy super microcomputer when, remember, when NVIDIA shouted Dell out, it was in the same context as super microcomputer. So then it sort of begs the question, is Dell the next super microcomputer? That was sort of Jensen's implication. Servers, networking revenue, sequential growth driven by AI optimized servers. There it is. Storage was up 16% sequentially though. Wait, so storage grew more than the AI servers did. Okay, that's interesting. Client solutions down sequentially. I mean, yeah, this is part of the old, more OG PC-based segment. Our strong AI optimized server momentum continues, with orders increasing nearly 40% and backlog doubling. Ah, here's the excitement. We just started to touch the AI opportunities ahead of us. We believe Dell is uniquely positioned. There it is. Yep, what did we just say? Is Dell now just at the beginning of AI-supported growth? Wow, look, they answer my question right here. It's like, Kevin had a question, here's your answer. Just keep reading. That's really good. Dell continues to expand its portfolio to help customers meet their performance, cost, security requirements across the clouds, on-premise and at the edge. They expanded their partnership with AMD, introduced new enterprise data storage advancements with NVIDIA, AI infrastructure. Oops, let's do this correctly. There we go. There's your NVIDIA partnership. Portfolio of AI laptops, otherwise. Okay. So, taking a peek here, servers and networking. Here are the 3 months, but it's the sequential growth that matters. Year over year, you're still negative. So what you had was a company that was basically year over year falling. You had a company with falling figures year over year. And now what you have is a company saying, now massive Q4 growth finally beginning. And by massive, we should quantify that. AI orders up 40% in the quarter with backlog doubling. That's pretty impressive. But they're still only guiding growth of about 5% for the year. But then again, how much are they actually doing in the AI sector here? Exiting our fiscal year at 2.9 billion. Ah, okay. So that's basically where all of their growth is coming from. See, let's see here. Well, maybe not all of it. But look at this. You're going from 88.4 to 93.5. So if I subtract these, 93.5 minus 88.4, you're at about 5.1. 5.1 billion is essentially where the growth is for the year. That's the growth. Which, that seems nominal, because that's a 5.7% growth. Okay, so we know that. But it's really that this $2.9 billion segment has sort of sprouted out of nowhere, AI, and that particular portion of the Dell business is really what people want exposure to. It'd almost kind of be like saying if Dell did nothing other than AI servers, you basically just exploded your revenue. So I think that's what people are looking at. And with Dell, the valuation is not very stretchy. So let's look at its valuation again. They were like a 1.6 when NVIDIA shouted them out. So now you're sitting at EPS growth has been, that's been written up as well. So for the end of the year, looking at trading for about 16 times. And market is projecting growth of, let's see here. Market's looking at, about 9.8% growth. Okay, 9.8 times growth. So 16.2 divided by 9.8. At the current price, because of the upright in EPS, you're still at a 1.6 peg. Still at 1.62 peg given EPS upright. Up revisions or revisions. I'll just call them revisions with 744 expected by January 2025 and about 9.8% growth from there. All right. So there's Dell for you. Basically, you went from let's go Q1 2025. You basically went from a company that was shrinking to a company that is growing. And it's pretty much strictly growing because of AI. So went from shrinking to growing, and the place to really see that is not in the overall number. Overall growth projected just 5.7%, but that's not what people care about. It's, again, this, the AI portion. AI portion of biz up. What do we got here? 40% in the quarter with backlog doubled. Let's see here. Servers and networking revenue was 4.9, primarily driven by the AI optimized servers. And that was in the quarter. Storage revenue was 4.5 of that. Okay, so I think the AI server segment only made $400 million in the quarter. So AI, if I'm going to divide this out, I think I'm right. 400 million revenue in AI servers in Q4, and they're projecting 2.9, so 2.9 divided by 4. They're projecting 725 million projected per quarter in 2024. So that's where you're getting some of this difference, is this one segment doubled and finally creating growth for the company across the board. Now that makes sense. All right, listen in here for a moment. What are they saying? Musk? Uh-oh.
1.5 months ago, Jim, we thought it might have been sooner that we saw some legal action.
Well, I remember that part, and I just said, I initially said, and I think a lot of people watch this, a couple billionaires sitting around being angry at each other. But when you listen to it closely, there's a real disclosure issue here. Remember, Microsoft's a public company, and that made it so it's public. And I think that you don't turn a nonprofit into a profit. It's entirely possible you can say, look, we have nonprofit stuff, but let's spin that off if we find something profitable. Maybe you could actually send it back to the nonprofit. But David, I listened to Musk, and it just seems like it's obvious that Altman did something wrong.
Well, I mean, it'll be it will be worth watching closely. There's no doubt about that in terms of their reference to the 2015 sort of founding agreement and what it memorialized and what it said. Obviously, Musk was the main funder back in the earliest days of the company. Unclear what the outcome will be, certainly at this point, Jim, or exactly what it is he wants, Musk. I reached out, but I don't expect we're going to hear anything.
Is there any aspect of it that's just he wants to inflict pain?
I'm not certain. I know that he's been frustrated for quite some time, as you heard, in terms of the change and his concern overall that AI will be a threat to humanity. That said, Tesla is obviously very much developing its own, and full self-driving is reliant on it. They've taken a new approach fairly recently in terms of using generative AI to power full self-driving, I believe.
Right.
And that could result finally in the breakthroughs they need to actually bring this technology to a car near you in a way that Musk has promised for many years and not yet delivered.
It's the authorities that have made this so hard. I mean, we're in this mode where cars cause a huge amount of fatalities that are driven by humans. If one person is killed by a self-driving, we shut it down.
I know
think about how crazy
it makes no sense.
Think about what it's like to have some drunk or drowsy person on the wheel. We're unwilling to accept any
level of risk at all with autonomous.
That's what's happening.
But of course, 30,000 people.
But we shouldn't. It shouldn't. But you can't deal with local municipalities run by one and the insurance company.
Yeah, I mean, this is an interesting point. This is an idea that others have echoed as well before. That we train humans how to drive every day, and what do? They kill 45,000 people a year in the United States. So the humans were training to drive cars. If we compare entities, right? The humans were training to drive cars, kill 125 people per day in America. Oops. The AI were training to drive cars, I mean, like, maybe people have implicated AI in a handful of deaths, but those handful of deaths create so much more outrage than the fact that 125 people die in car accidents every single day in the United States. And that can actually, lead to preventing a safer system from actually helping people drive. It's really interesting. It's sort of this massive political issue where it's like, oh, well, if a computer kills somebody, that's absolutely terrible. If, somebody else kills somebody at a rate that's, 1,000 times as frequent, so 1,000 times as many people are dying, oh, well, if it was an accident, it was okay. I mean, not that it was okay, but like, okay, like it's potentially forgivable. It's a very interesting, thought-provoking consideration.
Yeah, but raised an enormous amount of money, has a $70-80 billion value based on the last placement of capital.
So they have Microsoft has to disclose everything. It just doesn't sound like it's disclosed properly. Outlaw the Musk lawsuit, where he didn't disclose everything properly to these dissenting shareholders. But again, you and I might say, or I would say, oh yeah, you know what? You made so much money. Shut up. But that's not the way the law works.
No. So we'll be focusing on this. Don't forget, though, of course, Tesla and its own. I mean, they're a huge buyer of your friend, Mr. Jensen Huang's.
Remember, they tried to get it away from
H100s.
Jensen, and then that last conference call, he said, yeah, NVIDIA has it. There's nothing we can do. By the way, Dell has the 200, which is the next iteration, and that is going to really separate the haves from the have-nots. David, this is really used, the have-not economy.
And meanwhile, we'll see what ChatGPT 5 is going to look like, or 6 or 7.
I use it every morning.
All right. So, all right, we touched on Dell. We touched on New York Community Bank. We touched on the Elon OpenAI lawsuit. Good Lord, there's just so much freaking news today. Today, I gotta get to the airport like ASAP, so I'm not going to be able to stick around much longer today. But anyway, so let's see here. Just want to see what else we have here. So, Mohammed Al-Arian suggesting the Fed being hostage to data is asking for trouble. High-frequency inputs are important in any assessment of economic conditions. Fine. In today's economy, an excessive focus on the number of tips excessive focus on the numbers tips the balance of risk towards keeping interest rates too restrictive for too long. Undue data dependency originated with its inflation is transitory. Oh, how interesting. That's actually a fascinating argument by Mohammed here. I always think he comes up with some pretty interesting pieces. He's a Bloomberg contributor, and he's always on TV and shows as well. But anyway, this guy, what he's basically saying is the Fed's data dependence is what created the idea of transitory inflation. Now, I think you can go back and argue that saying transitory then was very insensitive and wrong. We know that. That was clear. But eventually, it will prove to be transitory. We'll just sort of look on a 10-year horizon and go, whoop. But what he's basically arguing is by being so data dependent today, you risk actually making the same mistake that you did in 2021. Let's see here. The time has come to discard the excessive data dependence that risks making the Fed too backward-looking and overly restrictive. Historic data should not be the sole determinant of policymaking. I don't know. I feel like part of what the Fed's doing is like massaging the society. So they're arguing that the Fed's data dependencies were created the idea of transitory inflation, and he's basically saying the Fed needs to start using forward-looking data to prevent over-tightening and making the same mistake in reverse. Okay, that's basically what they're arguing. Fine. I think what the Fed's doing, this will be my opinion. I think what they're doing is they're aware. I believe, the Fed, they're aware of the risk of over-tightening, but I think they know they can cut really rapidly if necessary. And historically, they do. Historically, the Fed cuts, and this is rough, okay? Historically and roughly, we'll say. Historically and roughly, the Fed cuts slowly for maybe 9 months, and then rapidly cuts. So, and I think they realize they can do that as problems start popping up. One of the places we can see that is if we go to the FOMC, let's see, rate. No, let's go Fed, FOMC rate. Yeah, here we go. Effective Fed funds rate. Okay, so if we go here, we can see, and then we're going to go 2008 recession doesn't really qualify for this, as you can see how quickly rates came down starting in about 2007. But again, it shows you that rates usually come down fast. So rates down fast. Here you go, early 2000s, rates down fast. This was an anomaly, the 90s, we'll talk about in a moment. Here, you get rates come down in 89 for about it's about 9 months. So you get about 9 months of rate cuts. Then you get this pause for, a few extra months here, maybe 7 more months, and then just this plummet of interest rates. Okay, interesting. Obviously, coming out of 82, you cut rates, but you also get this bizarre period of time where you actually bump rates again, only for them to come down even lower. I guess what you're looking for is where are rates ever really flat once they're starting to cut. And when they're starting to cut, it's hard to see rates really flat for more than 4 to 6 months. The longest period of time I see is over here in 90, excluding this sort of soft landing period of the mid-90s. So this is probably the best example of this. Oh yeah, let's cut and pause. Let's cut and pause sort of idea. This mid-90s is fascinating. But usually when the Fed cuts, it ends up being substantial. So I guess we'll find out. But that's an interesting one from Mohammed.
Way to portray what happened this quarter, because it was very strong for Dell, their direct competitors. Do I know about whether look, how do we know that they didn't make their bed with another way to do it? Now, just so you know, Michael Dell also got all the good AMD. AMD is great. It's great AI.
So interesting.
So I'm just saying that HPE may have a view that industry is softened, but Michael Dell, look, Michael Dell's telling me today how strong the demand is. So I'm just not buying what HPE is selling.
Yeah, so just to finish that thought, I guess, it's really a way of saying the Fed has to sort of massage markets today to make them think, oh yeah, we won't aggressively cut if we have to. And that essentially keeps financial conditions tight. And by keeping financial conditions tight, the Federal Reserve is able to hopefully prevent this second wave of inflation. I mean, but then again, you look at the 5-year break even today, the 5-year break even ticked up again a little bit more after PCE. We're at 245 on the 5-year break even now. If I go to the 5-year forward, that one's generally been a little bit more stable than the near-term 5-year break even. Yeah, no real movement there. But the 5-year break even, that's just been running straight up like a meme stock. And it's been running up since about January 31st. Longer-term trend since about the beginning of December. So something to watch.
Nobody knows what you're talking about when you talk about digital twins.
Well,
you always go there.
Well, it's the AI factory. Now I feel bad.
I'm sorry. I didn't make you feel bad.
Anyway, you can say you're so focused on this. But what I'm telling you is that when you sit down with an Apple, or you sit down with the Dell, you sit down with the Salesforce or with the ServiceNow, this is it. And then we can sit down with Louis and it's GLP-1s, and then we sit down with Campbell Soup and Freya. How's Freya?
All right, great to hear it. Can't hear much else in there. At the Good Boys Ratio, Bitcoin Plus ETF, celebrating its recent listing. We will speak with Grayscale CEO Michael Sonnenschein.
Very important.
Oh, yeah?
Yeah, because we want to know about Ethereum.
All right, there's our opening bell. So let's watch. I mean, obviously with curiosity, Dell, there it goes. You've got the opening bell on Dell, and it's now up 35%. It's crazy that a segment that makes up about 3% of their revenues is leading the stock to explode like this. But you will say you did end up getting that pitch from Jensen. And of course, everything Jensen touches turns to gold. So, boy, don't bet against Nvidia's Jensen. On the flip side, you've got New York Community Bank now down about 29%. Supermicro moving about 1.8. Tesla trying to go down again, 30 basis points. I'll tell you, Tesla's probably the least loved stock in the stock market right now, mostly because it seems like you can pretty much buy anything else, and it goes up when Tesla goes down. So that's a very interesting one, just the way it's been behaving. C3AI, 4.2% to the downside. Did have a pretty remarkable day yesterday, though, so a little bit of give back here is not a horrible surprise. You've got, let's see, Marvell's popping up, 3.8. You've got Snowflake, 2.2. Nvidia's up 1 in the morning here. Bitcoin sitting 62.4. Obviously, a lot of enthusiasm about the amount of supply for Bitcoin that is being absorbed by Bitcoin ETFs, leading to even less available in the free markets outside of ETFs, probably creating some of this pressure to the upside. Pretty remarkable. You're now down 30% on New York Community Bank. Tesla now down 0.5%. And towards the upside, which is where some more of the entertainment is, still 33 on Dell. AMD 2 in a chunk. Nvidia moving up. TSM's up back at 130 here. AMD's about to break 200 on AMD. Pretty impressive. Yeah, Apple least love. Yeah, Apple, you're right. Not much love here, especially price cuts in China, leading to a little bit less enthusiasm as well. So how about Intel? Is Intel going to get any love? Intel Corporation. You're about 43. You've been somewhat range bound on Intel for a period of time here. Did run up to about the low 50s there, and then we're a bit range bound. So, you know, what I think is remarkable is the AI play will play well, and you know, these are real sustainable revenues. The growth rates are not sustainable, but the revenues are real and they're sustainable. But what'll happen is, I think at some point you'll go through this candle of euphoria here in AI, and that candle of euphoria will move on to something else. Some are expecting it to be small caps, not necessarily interest rate sensitives. Of course, that's on top of mind for many, but small caps are a potential option. And that's really how, when you get this sort of candle of enthusiasm that moves through the market, you get just this massive expansion of stock market wealth. It's really, really interesting. So anyway, stay tuned for my interview with Ross. We'll be posting that a little bit later. Obviously, if you haven't yet, consider checking out HouseHack if you're an accredited investor looking to invest. It's househack.com/2024. And yeah, hey, appreciate y'all. We'll see you in the next one. Thanks so much. I'm going to go push my button now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right, folks, we'll see you in the next one. Thanks so much. I do have to run, so that means we'll have to pick up on the Course Member Live different time. Thanks, bye.